Hello, Oracles. So we had another great green day today. This shirt means that I'm going to need to go and buy myself some more green shirts the way we've been running. But I don't want to be a negative Nancy here. However, I'm looking at just the reality of the situation and putting things into perspective is we're now coming out of the deep depths of where we've been. This is a great thing. Obviously, we've fallen very far from our all-time highs that we were at just previously a few months ago. But we're climbing back up. We're coming out of this. It feels great after all the red that we have been through over the first couple of months of the year. Finally getting some relief, but just some things to pay attention to are the end of the quarter is next week. A lot of times at the end of a quarter, a lot of portfolios do some rebalancing, institutions are doing some selling off, taking some profits, and especially with the run-up that we've had recently, we might see that coming. Don't know if it actually will happen, don't know how much it's going to happen, but this is just something that is on my radar. So I was taking a look and there is a gap in the Nasdaq down to 12,950. So that is a significant way down from where we're at right now. Just something to monitor and pay attention to because as we have spoken about before, gaps fill 9 out of 10 times. So we have been anticipating a potential second pullback that is coming. Again, we don't know when, we don't know why it's going to happen, but there is that gap to be filled. So just putting some dots together here are telling me that this is probably going to happen. I just don't know when. And so I'm just going to be prepared for it. I mean, truly, I don't want it to happen. Right now, I am almost break even for the year, almost back to green and profitable on the year. So I don't want to go red, but I have to be a wise investor and be aware of these things that could potentially happen. So I am going to do the exact same strategy that I had before, but as I had said yesterday, I'm just going to do it in reverse. If we do start to dip, I'm going to just nibble little bits instead of doing it in larger chunks. So I'm just going to buy little bits here and there, and I'll take smaller bites of fudge until we get down closer to the bottom, and then I'll have more cash on hand to buy some bigger chunks of fudge. Just something I'm paying attention to. And looking at specific stocks individually, Nvidia did awesome today, doing great. We've got NEO earnings going on tonight. They haven't come out yet, so I will keep on checking on those. Might have them for the Tesla video when I record that. But got some things moving. Again, we're moving in a great direction. And Slim, you are absolutely right. I did a double check on this. There is a gap in Tesla, a very tiny gap. It's almost, I think it's less than $1 that goes down to just under 802. So again, if the Nasdaq is going to pull down to 12,950, there's probably a good chance that Tesla is also going to pull down and fill that gap to 801. So if you're looking for opportunities to possibly get in and looking for another dip on Tesla or some other stocks that you like, it's probably going to be coming. Again, I don't have a crystal ball. I'm not a financial advisor, but this is just something that I am noticing in the charts, and I think it's probably going to happen. Might happen next week. I mean, that's a far way to fall in a week, but look at how much we have climbed in a week. So we'll see what happens. So again, I thought initially, based on what Chicken Genius said, yes, I know Chicken Genius has stepped away from YouTube, very sad, but he was anticipating May being that second bottom. Again, don't know when it's going to happen. I thought the last time in January when we fell back, I thought that was going to happen in February. So perhaps big money, knowing that a lot of people are anticipating it falling back in May, might pull that rug sooner from us. So maybe at the end of April, around earnings season, we get that rug pull. Lots of different things thrown up in the air. Again, these are just the little different pieces that I play in my head. We remember what happened in January. We thought it was going to happen in February, and we actually got it 2 weeks before earnings came out. Is that what's going to happen again? Will we maybe run through the end of March and the end of the quarter and continue rallying, and then 2 weeks into the new quarter, we get the pullback? Again, lots of different things. This is why being an agile investor is the most important thing you can do for your portfolio and for yourself, is just be ready for anything. The market right now is still volatile. Yes, we've been on an amazing rally over the last week and a half. things feel great, but do not get lulled into this. I've had plenty of conversations with many of you in the comments about, the reality of the situation is we do still have Russia-Ukraine going on. We do still have very high inflation. We do still have the Fed raising interest rates. They just did their first of a known 7 interest rate hikes that they want to do over the course of the year. They said it's not beyond them to do 2 rate hikes in one meeting, although they would prefer to not do that. That's still a possibility. So there's still a lot of underlying stuff going on. The thing you have to remember is the market likes certainty. They do not like uncertainty. Right now, watch the media. In the media, we're not getting any of the FUD that we had before. It's not there. We don't have that same sentiment. But don't forget, it's still realistically there. This is something we pay attention to with Tesla all the time is, despite there being FUD, look at the fundamentals. Look beyond the FUD, look beyond all of the annoying lights and sounds that are out there in the media. Take a look at what's truly going on. And what's truly going on is we still have a war raging right now in Ukraine. We still have the high inflation and we still have the Fed raising rates. So, look at that as the reality. So take this time to look at your portfolio and make some assessments and say, maybe there's something I want to go profitable on and then sell out to free up some cash for another potential dip that might come. And one of the things I loved about my strategy with dollar cost averaging and buying a little bit more every time we went on our dip was the fact that now that we've gone green for the last week and a half, my portfolio has gotten back to even a lot faster than it would have been if I either tried to time the market, which if I succeeded, I would have been way more successful. But, if I just let it and held and I didn't do anything at all, then it would still take me a lot longer to get back to even. So this has worked out really well for me, and I'll do some tweaking along the way and just keep on playing the strategy that I've been doing. Again, I still think long term we are going to do extremely well. I think a lot of these plays that we are in are going to do fine. I think we're going to have a rally in the fourth quarter this year. By then we're going to have, inflation should be coming down. Interest rates will be, halfway to where their goal is going to be. Hopefully the war is going to be over. We'll be past the midterm elections. So we will have all this clarity at the end of the year. And again, that's what the market likes. So we'll have plenty of room to run with a lot less of the negativity underlying everything being there, because we'll have a lot of that actually removed and it won't be FUD anymore. It'll be realistically the bad news and the negativity will be gone. So that gives us a good sign for us to do a true rally and not just a removal of FUD rally. And so while I don't want to say that this is a bull trap, I do just want to be cautious. I want to continue enjoying this rally. Again, I hope it does continue on going up as we have been. But just being realistic, there's a good chance that we will see a pullback coming to fill these gaps. And one other thing that I have noticed is my crypto has been running as well. So as the market's gone up, my crypto has also gone up. And I do a little bit of dollar cost averaging in my crypto as well. For me, it's a very long-term play. I don't plan on selling any of my crypto. So for me, I'm just putting it in there because I think over the next 10 years or so, it's going to become more commonplace and the value will be significantly higher. So I'm just going to dollar cost my way in. So every Friday I put $10 into Cardano. Every day I put $1 into Dogecoin. I have my BlockFi rewards card, which gets me 1.5% back in Bitcoin for all of my purchases. And then I also have 5% back that I get for one purchase at a restaurant, which I take my son out to every week on my Cash App card. So this is just my way of putting a little bit of money into crypto. Again, it's very small dollar amounts, but dollar cost averaging over time is going to pay off in the long run, in my opinion. And so now with these gaps that need to get filled, with the end of the quarter coming next week, and with earnings coming at the end of April, let me know your thoughts as to if or when you think we are going to see this pullback coming to fill these gaps. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.